Welcome back to another video where I'm going to reveal the top 5 undervalued stocks right now in July 2021. Number 1, we have Honda Motors, ticker symbol HMC. The 1-year chart has been gradually increasing, and let's dive deeper into the fundamentals. On the 52-week range, you have it ranging from $23 up to $33. Right now, it is currently near the 52-week high, which shows that there's a lot of momentum and interest in this specific stock. With the market cap, it's sitting at $59.38 billion. You have a price earnings of 9.51. Their revenue is in the trillions, 13.17 trillion, net profit margin at 5.28%, and the return on capital at 3.28. Here we have Honda's income statement. Net profit margin has gradually increased over the years, and so has the revenue. Although in the previous quarter, the revenue shrunk slightly, but overall it's looking pretty good. Over here in the balance sheet, your debt to asset ratio actually fell around like 62% compared to December 2020. And with all of that, you may be wondering, why is this so attractive? Well, let's go through some recent news. So they actually just announced this previous week that they have their first electric crossover. It's going to be called Prologue, and it arrives in 2024. And they're actually aiming to be zero carbon emission by 2040 for all their vehicles in North America. And it's going to have a combination of their fuel cells and BEV as well. This essentially allowed them to get a lot of attention from different analysts, and they're currently rated a strong buy. There's 2 analysts with their 12-month price target of $36 and the earning per share estimate of 3.124. With that being said, let's go on to the next one. All right, next we have Mr. Cooper Corp, which is a mortgage corporation. And as you can see, once again, it's had that beautiful chart uptrending over the year. And this one is more so of a long-term hold. And we'll dive deeper into the fundamentals and other aspects as well. All right, let's look at their income statement now. As you can see, it's a beautiful bar chart. You can see significant increases quarter over quarter, and they actually grew by 32.95% in March 2021 when you compare it to the previous quarter in December 2020. So not only did their net income grow by 195% to 556 million, but even their revenue grew up to 1.27 billion, which is massive. And then you have on their balance sheet, their debt to asset ratio shrunk and fell by 1.86%, which is great as well. The analyst recommendation is buy, with 2 analysts giving a strong buy, 2 analysts giving a buy, 3 analysts giving a hold. Some recent news, they actually sold the Title 365, which was their title business, for $500 million, and this would help fund some of their capital initiatives. Now, another thing to note is that Google Cloud announced a partnership where they are creating a more customer-centric digital mortgage servicing platform, and they're incorporating different types of technologies such as artificial intelligence and machine learning as well. This would help them really expedite and facilitate more documents and allow them to capture more of the business. Now, we have a price target of 40.86. This is the 12-month price target, and the earnings per share estimate of 7.3. With that being said, let's go on to the next stock. Number 3, we have Qualcomm, ticker symbol QCOM. Let's get right into it. Looking at the fundamentals, we have a 52-week range of around $86 up to $168. A market cap of 161 billion. You have the price earnings of 20.02, and you have the earnings per share of 40.22. And then you have the revenue of 21.73 billion, the net profit margin, which looks really healthy, of 23.92, and you have the return on capital of 23.22. Now let's go ahead and look at their income statement. The revenues that actually fell, but the reason this is so attractive to investors is because there's a lot of potential in 2022. Given the current shortage of chips, these guys can really make up for it in the latter of the 2021 and 2022 portion, and then really recover and outgrow their previous records. And here you have an analyst that said it could have 30% upside. The reason being is because he believes that there's a lot of revenue that can come in from their licensing business, as well as their hardware and software sales. And this could happen as soon as early 2022. And he actually expects a 19 times multiple given their leadership in the 5G technologies. Let's have a look at their balance sheet. So you can see their debt to asset ratio actually lowered by 1.29% compared to the previous quarter. And here we have it. The analyst recommendation is a buy, with 9 analysts giving a strong buy. We got 15 analysts giving it a buy and 8 analysts giving a hold, with just that sole one giving it a sell. With a 12-month price target of 171.3 and an earnings per share estimate of 7.78. Amazing news that they unveiled their Snapdragon 888 Plus 5G mobile platform, which really fuels some of the smartphones such as Motorola, Vivo, Honor, Asus, and more. The power and the capability that this will bring into the smartphone market, which makes the stock even more valuable. Number 4, Toyota Motors, ticker symbol TM, which is currently trading at $174.54. So on the 52-week range, you have 119 all the way up to 185, with a market cap of $289 billion and the price earning of 12.34, revenue of 27.21 trillion, and their net profit margin of 8.39, which is quite decent. Return on capital of 3.93. And the revenues fell compared to the previous quarter, although it's starting to look like they're investing more into their EV technology, which could pay dividends in the near future. And then you have their balance sheet, where their debt to asset ratio fell by 0.29 compared to the previous quarter of December 2020. Now, here's the analyst rating of a strong buy, and there's a lot of reasons behind this, but for the most part, recently their shares topped 10,000 yen for the first time ever. And the company is also considering moving their EV production line over to the States if the demand continues to grow. Given this, they're looking at a 12-month price target of 187.76 with an earnings per share estimate of 10.10. And then last thing to keep in mind is they may do a stock split later in this year around October time. So once that stock split happens, there's potential to go even higher. So it's a great opportunity to get in early. Number 5, MarineMax, ticker symbol HZO. One of my favorites, actually. I've traded the stock time and time again, and I've found it to be very consistent and reliable. It's got a lot of potential, and with its 52-week range of 22 to about 70, it's got a lot of attention due to their recent acquisitions, which we'll get into on a later stage. Now, their market cap is 1.07 billion with the price earnings of 8.82, and you've got their earnings per share of 52.34% and their revenue of 1.51 billion with the enterprise value of 1.01 billion. And lastly, you got the return on capital, which is around 13.69. Now, their revenue grew by 27% in March 2021 as compared to the previous quarter, and now it's sitting at 523 million. And their net income grew by 65% to 38.94 million. These guys are clearly doing something right. And on their balance sheet, you have their debt to asset ratio, which fell significantly compared to the previous quarter. And here we have the analyst recommendation, which is a buy, with 1 analyst saying it's a strong buy, 3 saying it's a buy, and then 4 saying it's a hold. And recently, MarineMax acquired Cruiser Yacht, which will help service and sell to specific retail networks in the region. Now, their acquisition is seen as a strong purchase because they are essentially going in the grassroots and partnering up with these smaller retails that bring in an influx of customers, especially for their different type of yachts. And they have been acquiring a lot of businesses recently, a lot of yacht makers, a lot of boaters, and this allows them to capture even more market share for the near future. And here we have a 12-month price target of 57.83 with an earnings per share estimate of 5.69. And that brings us to the end of this video. If you enjoyed this video, go ahead and give it a big thumbs up. Drop a comment. I'm reading every single comment, and feel free to subscribe. I'm going to be putting more and new content on this channel. If you made it this far and you're still listening to my voice, go ahead and drop some suggestions in the comments below on new content or videos I should come up with. And be sure to subscribe, as it motivates me to put out even more content just like this for you guys. If you enjoyed this, once again, give it that like, and I'll see you guys in the next video.